Hello and welcome to the Boston Income Fund video report for the quarter ending March 2026. My name is Tim Power and I'm a non-executive director of Boston Managed Investments Limited. The Boston Income Fund, also known as the BIF, delivered a return of 2.87% for the March 2026 quarter, equivalent to an annualised return of 11.66% net of fees. Distributions for the March 2026 quarter will be paid in full to BIF investors or allocated where reinvested on the 16th of April 2026. BIF returns combine the 30-day bank bill swap rate, or BBSW, a core money market benchmark that is partially anchored to and significantly shaped by the Reserve Bank of Australia's official cash rate, plus a margin that reflects prevailing market conditions. The RBA lifted the cash rate twice in the March 2026 quarter to 4.1%, which has pushed BBSW 30 to 4.05% as at the 31st of March 2026, leaving the BIF margin over this benchmark at 7.06%. Continued growth in property security valuations, together with improvements in credit quality and increased liquidity, strengthened the underlying risk-return profile of the BIF. However, it has contributed to the ongoing margin compression across mortgage-backed securities and structured finance transactions. Looking ahead, major banks and other economists are forecasting further cash rate increases through the rest of 2026, which is expected to offset at least some of the current margin compression. Before I finish, I would like to remind you that BIML Chief Executive Officer Darren Harrison will begin his quarterly calls to BIF investors through April and into May 2026. For any questions ahead of his regular investor calls, please contact Daniel, Paul or Alice directly on 02 8920 8886. Thinktank Group Proprietary Limited, or Thinktank, the mortgage origination platform in which BMIL primarily invests, continued to exhibit robust growth whilst maintaining disciplined credit standards through the March 2026 quarter. Despite two consecutive RBA cash rate increases and expectations of further monetary tightening, Thinktank's portfolio grew by $558 million to $8.8 billion. Warehouse funding costs continued to improve in favour of the non-bank lender, while conditions in the securitisation market were more cautious amid heightened tensions in the Middle East, though this has not disrupted Thinktank's access to funding or operational momentum. BMIL assesses the key parameters of Thinktank's loan portfolio each month, providing ongoing insight into performance trends and operational metrics to confirm alignment with investor return objectives and credit covenants. Arrears continued to reflect borrower resilience despite ongoing cost of living pressures and the re-acceleration of inflation. Arrears remained stable at 1.49% of loans by outstanding balance as at the 31st of March 2026, compared to 1.45% at the end of the December 2025 quarter. These figures reflect Thinktank's disciplined credit selection and proactive arrears management, reinforcing BMIL's confidence in the quality and resilience of the underlying portfolio. Australian residential property values continued to rise through the quarter, supported by population growth, low listing levels and a structural undersupply of new dwellings. This sustained appreciation supports collateral values across Thinktank's portfolio. Thinktank's conservative credit positioning, including robust serviceability buffers and low average LVRs, provides meaningful protection for investors. This concludes our video report about our strategic investment allocations, and I would like to thank you for your support and for taking the time to watch another of our video presentations.